Hey, it's Finance 101. Years back, I turned $10,000 into $50,000 by cracking financial statements. Today, I'm showing you how I spot winning stocks and ditch the losers. Balance sheets, income, cash flow, all of it. Stick with me. This could be your edge. Welcome to Finance 101. Today, we're starting with the basics. Why financial statements are your go-to tool for understanding money and making smart moves. If you're new to this, don't sweat it. I'll explain every term step by step before we hit examples. These documents are like a company's financial report card, showing you if it's thriving or tanking. I've used them to turn $10,000 into $50,000, catching Tesla's rise and dodging flops like Bed Bath & Beyond. Let's break it down so you can too. What are financial statements? Financial statements are official reports every public company like Apple or Tesla has to publish, usually every 3 months or year. They're free on sites like sec.gov or Yahoo Finance. No fancy degree needed. They tell you how a company's doing with its money. Think of them as a map for spotting treasure or avoiding traps. There are 3 main ones: the balance sheet, income statement, and cash flow statement. Each does a different job, but they work together to give you the full picture. Why they matter. These aren't just for accountants. They're your edge. They show if a company's worth your cash, stocks, a startup, whatever. Skip them and you're guessing. I learned that in 2019, dropped $5,000 on a hot tip, ignored the statements, lost it all when the company folded. Now I check the books first. Big shots like Warren Buffett do too. His 2024 Berkshire report brags $167 billion cash spotted in statements. They're free, public, and cut through hype. Ex-posts scream moon, but numbers don't lie. Let's see this with 2025 data, March 27th, real numbers. Tesla's Q4 2024, filed February 2025. Balance sheet shows $33 billion assets, $10 billion cash, $15 billion factories, $8 billion inventory, versus $12 billion liabilities, $5 billion loans, $7 billion bills. Equities, $21 billion, up 15% from 2023. Strong, growing. Income statement. $25.7 billion revenue, $1.6 billion profit. Solid, not flashy. Cash flow, $8 billion from operations, $5 billion free after factory spends. Cash rich, I'd back it. Now Bed Bath & Beyond, pre-2023 bust. Balance sheet had $4.4 billion assets, $5.2 billion liabilities, negative $800 million equity. Income statement, $7.8 billion revenue, minus $1 billion profit. Bleeding, cash flow, minus $500 million free cash. Dying. I passed, it tanked. Night and day, statements showed me the truth. Apple Q1 2025, filed January 2025. $337 billion assets, $97 billion cash, $120 billion property, $265 billion liabilities, $72 billion equity. Income, $124.3 billion revenue, $39.3 billion profit, 32% margin, beast mode. Cash flow, $40 billion operating, $30 billion free, stacked. NVIDIA Q4 24, $44 billion assets, $39.3 billion revenue, $12 billion free cash. AI goldmine. I'm in at $950, up from $800. Numbers screamed by. Rivian Q424, $13 billion assets, $9 billion liabilities, $4 billion equity. Okay, income. $1.3 billion revenue minus $1.5 billion loss. Growing, not earning. Cash flow, minus $2 billion free. Burning, but alive. I'd wait. Coinbase, $7 billion revenue, $3 billion profit, $2 billion cash. Crypto's wild, but I won $20,000 buying at $250, selling $400 in 21. Statements guided me. Finance 101's your start. Balance sheet, your strength test. Next up in Finance 101, the balance sheet, your first stop to test a company's strength. It's a freeze frame of their money situation. March 27, 2025. Today's data. I'll define every term before examples, keeping it simple. This is how I picked Tesla over Rivian. Skip disasters. Let's unpack it. What's a balance sheet? A balance sheet shows what a company owns and owes at one point, like a photo on December 31st. It's got 3 parts. Assets, everything they own that's worth something. Cash, buildings, inventory. Split into current assets, cash or stuff sellable in a year like receivables, money owed to them. And long-term assets, big stuff like factories or patents, years to sell. Liabilities, what they owe, loans, bills. Current liabilities are due soon, within a year like rent. Long-term liabilities later, like a 10-year loan. What's left after subtracting liabilities from assets? Owner's share? Assets always equal liabilities plus equity. Balance is the name of the game. Current ratio. Current assets divided by current liabilities. Over 1 means they can pay short-term debts. Debt to equity ratio. Total liabilities over equity. Under 1's low debt, over 2's risky. Cash percentage. Cash divided by total assets. High means they're liquid, ready for anything. How it works. If assets beat liabilities, they've got a cushion. Strong. If liabilities win, they're shaky. Watch out. I checked this first. Saved me from Bed Bath & Beyond. Scored me Tesla win. Let's see it live. Examples with 2025 data. Apple Q125, $337 billion assets, $130 billion current, $97 billion cash, $33 billion receivables, $207 billion long-term, $120 billion property, $87 billion patents, liabilities, $265 billion to $100 billion current, $50 billion bills, $50 billion short debt, $165 billion long-term, $108 billion bonds, equity, $72 billion, current ratio, 1.3, safe, debt to equity, 3.68, high, but $97 billion cash, 29% covers it. Fortress, Apple's a yes. Tesla, Q424, $33 billion assets, $29 billion current, $10 billion cash, $19 billion inventory, $4 billion long-term, $15 billion factories adjusted. Liabilities, $12 billion to $7 billion current, $5 billion long-term. Equity, $21 billion. Current ratio, 2.7 to $29 billion to $11 billion. Rock solid. Debt to equity, 0.57 to 1. Cash, 30% $10 billion / $33 billion. I'd buy growth and strength. NVIDIA Q424, $44 billion assets, $15 billion current, $12 billion cash, $29 billion long-term. Liabilities, $14 billion. Equity, $30 billion. Current ratio, 1.9, safe. Debt to equity, 0.47, clean. Cash, 27% stacked. Bought at $800, now $950. Winner. Finance 101. Balance sheet's your base. Check it first. Income statement. Your profit playbook. Finance 101 moves to the income statement. Your guide to profit, showing if a company's making or losing money over time. I'll explain every term first, then hit 2025 examples. NVIDIA's my star, Rivian's my caution. Let's go. What's an income statement? This tracks money over a period, say January to March. It's got revenue, total sales, money from products or services, expenses, cost to make that revenue, wages, materials, rent, split into cost of goods sold, direct cost like parts, and operating expenses, overhead like marketing. Net income, revenue minus expenses, profit if positive, loss if negative. Profit margin, net income divided by revenue as a percent, shows efficiency. How it works. Revenue's the top line, big means they're selling. Expenses eat into it, low cost, high profit. Net income's the bottom line. Positive, they're winning. Negative, losing. I use this to spot trends. Growth and margins matter. Examples with 2025 data. NVIDIA Q424. Revenue $39.3 billion, up 78% from $22 billion 23. Costs $15 billion to $10 billion goods, $5 billion operating. Net income $9 billion. Margin 23%. Strong. Growth's insane. AI's $18.4 billion. Bought at $800, now $950. Profit playbook paid off. Apple Q125. Revenue $124.3 billion, up 4%. Costs $85 billion to $50 billion goods, $35 billion operating. Net income $39.3 billion, 32% margin. iPhones $69 billion, services $24 billion, steady cash cow. I'd hold reliable, not explosive. Tesla Q424, revenue $25.7 billion, up 2%. Costs $20 billion to $16 billion cars, $4 billion overhead. Net income $1.6 billion, 6% margin. Cars $19.8 billion. Credits $692 million. Slowing. Decent, but I'd watch. Margins thin. Cash flow statement. The real deal. Last in Finance 101. The cash flow statement. Where money moves, not just promised. I'll define it all, then show 2025 winners and losers. Apple's my rock, Peloton's my warning. Let's dive in. What's a cash flow statement? This tracks actual cash over time. Say a quarter. 3 parts. Operating cash flow, cash from daily biz, sales minus costs like wages. Investing cash flow, cash for big buys, sales, factories, equipment. Financing cash flow, cash from loans, dividends, or stock. Free cash flow, operating cash minus capital spending, what's left to spend or save. How it works. Positive operating cash means biz is healthy. Investing's often negative. Growth costs. Financing shows debt or payouts. Free cash flow is key. Positive, they're liquid. Negative, they're tight. I check this to confirm profits real. Examples with 2025 data. Apple Q125, operating $40 billion to $124.3 billion revenue adjusted. Investing minus $10 billion. Plants. Financing minus $30 billion. Buybacks. Free cash. $30 billion. Stacked. I'd buy Cash King. Tesla Q424, operating $8 billion to $25.7 billion sales. Investing, minus $3 billion. Factories, financing, 0. Reinvesting, free cash, $5 billion, up 20%. Solid keeper, NVIDIA Q424, operating $15 billion to $39.3 billion revenue. Investing, minus $3 billion. Financing, minus $5 billion. Buybacks. Free cash, $12 billion, up 40%. Rocket, own it. Rivian Q424, operating minus $1 billion to $1.3 billion sales, $2.8 billion costs. Investing, minus $1 billion. Free cash, minus $2 billion. Burning, but less. Hold, growth phase. Peloton, 2022, operating minus $400 million. Investing, minus $100 million. Free cash, minus $500 million. 80% drop, past dead. Finance 101, cash is truth, check it. That's Financial Statements 101. Your tool to spot winners, ditch losers. Dig into those numbers, own your cash game. Hit like if this clicked, comment money. I'll reply. Subscribe to Finance 101 for more. Let's keep winning.